Hey guys, welcome to Next Trade channel. So in this video we're gonna be talking about Finance Bill 2022 with regards to virtual digital assets and what they are trying to talk about the taxation that will be that is going to be done for the income that you have earned in virtual digital assets. So first of all, virtual digital asset is a fancy name that they have given for cryptocurrencies, NFTs and any products that has to do with cryptocurrencies. Okay, so that has to do with blockchain actually. So what they are saying as an introduction part is like VDA has gained tremendous popularity in recent times and the volume of has increased substantially. Okay, and the market for payment via VDA is emerging as well. Okay, so for that purpose only they have proposed this section 115BBH section. Okay, so that's the basic point that you have to know. Okay, and I won't be reading the exact paragraph because it will be very generic and you can't literally understand what they are trying to say, or that won't be precise enough to say what they are trying to mention or what all will be covered. Okay, they will try to keep it as generic as possible so that everything will come under this point. Okay, that's their goal, and because of which we won't be able to understand that easily. So that's why I have made a point. Okay, that will be easy to understand. Okay, that's the point of this, purpose of this video, and I won't be reading this paragraph for the same reason, and I will be mentioning only the points that is in simplified version of this. Okay, so let's get started with this video, guys. First point is that for any income that you have earned for this financial year, that will be like from, let's say, 1st of April to 31st of March will be a financial year. So for this bandwidth of days, any income that you have earned and you have made it to your bank account, okay, withdrawal to a bank account, that will be taxed at the rate of 30%. That's the first point that you have to know. And second point is that you can't say like an expenditure that has been caused in this financial year, so that I am reducing the profit. Basically this point they are mentioning because it is an highly used point to reduce tax in the case of any business. They will say like they bought few computers, they bought few like some internet bill or some cost, and they will reduce it against the profit so that the net tax that you have to pay will be reduced. But in cryptocurrency, that is VDA case, you can't claim anything as an expenditure and you have to pay any profit that you have earned as a taxable income, and for that you have to pay 30% as a tax. Okay, and you can't club like any other loss with VDA. Like for example, if you have made a loss in the financial year with stock market, you can club it up with cryptocurrency and say like the net profit is this and I will pay 30% of for that. That won't be the case. Both this asset class will be like an distinguishable one. So if you have made loss in stock market, that won't be clubbed with that cryptocurrency. So for any income that you have made, you can't club it with any other source of income loss, and you have to pay 30% for any income that you have earned. Okay, so that's the point 2.1. and point 2.2 says like let's say like if you made a loss, you can't carry forward to the next year. Okay, next financial year you can carry forward and say like in the next year I have made loss in the last financial year, so I've made a certain profit in this year, so I would like to minus the loss that I made last year and say this is a net profit for these 2 years, and I will pay tax only for this profit which I made when compared to these 2 years. Was possible in business, and that is possible in business, but with regards to VDA you can't do that. So every financial year either you made a loss or profit, either you made a loss in the last year or not, you have to pay the same tax for the profit of this current financial year. That's the point 2.2. okay, and this is very important actually. So these rules will be effective from 1st of April 2022. Now we are in March, right? So 1st of April 2022 will be the next financial year, and 1st of April 2023 will be the subsequent financial year. So we have one financial year left for this amendments to be effective. Okay, that's the first thing. And again they are saying like from 1st of April 2023 every subsequent assessment years will be valid. Okay, so that's the point of this. The point number 3 says like they have inserted VDA into the section 194. Yes, okay, and what they are saying is like for every transactions that you made using INR, for that you have to pay 1% of the net volume or the net sum of money that you have used to make the transaction as in tax. Okay, that's called as TDS. Okay, so that you have to pay for every transaction. What I'm currently confused is like whether it is for either both buy and sell, or like only for the buy. That's the only part I'm confused about. But what they are plainly saying is like for every transaction that you have made using INR, for that you have to pay 1% tax. That's for sure. But for any transaction that is based on like from by using transaction, let's say like you have sold Ethereum to buy BTC, or you have sold Ethereum to buy USDT and stuff like that, and whether you made a transaction in decentralized exchanges and stuff like that, or you sold in NFTs, for that stuffs, what you have to do is you need to self-interestedly say that these are the transactions and you have to pay 1% for that. That's the point that they have mentioned in here, and that's the point which I have mentioned here. Okay, so what is it? Already you are paying 30% tax for the profit that you have made, but that profit can be made only after you are paying 1% tax. So overall you are paying literally for one transaction for this financial year you have to pay 32% to 31% tax alone. Okay, so I thought like 30% is a very big number, but actually it seems like that's not the case. It's even more that you have to pay just because you came across such like an income. I will say why. So let's say if you are a trader, and let's assume that you trade every single day, that's your only source of income. Okay, so what will be the case? Let's say if you trade for 100 rupees and you trade for like 365 days, so 1% of 100 rupees will be like 1 rupees, right? That's small number. I mean, of course it's big for a transaction, but saying okay. So let's say if you make transaction with the same 100 rupees for the next 364 days, what will be the net amount, right? So that will be 365 rupees, right? So your actual amount with which you are trading is 100 rupees for this whole year, but for the tax part alone you have to pay 365 rupees. What does it mean is like if you have to be in a profit section, you have to make more than 3.5x for that financial year of that 100 rupees. Okay, so if you make a transaction every single day, so you have to be your 100 rupees that you started the year should be like 465 rupees to be break even. Okay, that's the case, and only after that only your income will start. Just imagine that. Of course no one is going to trade any like in daily basis hereafter, but imagine to the people who are actually trading like that, those people will be like you know bankrupt, I would say, but yeah, it's up to them. So that's how TDS works, and it is very tedious to pay TDS alone with this kind of rules. So let's see how it's gonna be. So again, another point is like, let's say, I would say who's that specified person they are mentioned in the later point. Okay, and let's say, let's see about in general case. Okay, the provision of section 203A and 206AB will not be applicable. What does that mean is like, there will be rules, you would have heard it anywhere, I guess, like they will be saying like, by you can claim that health insurance up to 25,000 rupees per financial year, that you can reduce for the taxable slab and stuff like that. Okay, so that won't be applicable here. You can't club like, I made an health insurance, so please deduct 25,000 rupees from the taxable income slab for this financial year. No, nothing like that you can do, right? So there is no deduction at all. So no tax is deducted in case the payer is in the specified person and the value of the aggregate of such value of consideration to a resident is less than 553,000 rupees during the financial year. In any other case, the said limit is proposed to be 10,000 rupees during the financial year. So what that is saying is like, if your transaction volume or like that deposit withdrawal, the withdrawal or the deposit is less than 10,000 rupees for other persons, and for let's say the specified person, which I will mention later part of this video, for those guys, they have to pay like 50,000 rupees above alone tax. If they are transacting or like involved with INR which is less than 50,000 rupees, they don't have to pay tax. Just something good, but yeah, for the whole financial year, 50,000 rupees is going to be suitable for many persons who are in middle class, but for those people who are into crypto fully, it won't be enough, I guess. So that's the point 3.1, guys. So yep, and weirdly enough, if you have there is several ways to collect, deduct or tax in businesses. Okay, let's say for example, you should have paid actual tax for a product that is shipping from another country to a country. Rather, you have to pay tax in when it comes to that customs. Okay, so that's like tax after tax. Even GST was proposed to eradicate tax into tax. Okay, that's the actual part. And what they're saying is like, if you have paid this 1% tax for every transaction, then you don't have to pay tax for any other proposed sections. Okay, or any other sections, you don't have to pay tax if you have paid tax for the section 194S. That's their point. Okay, that will be applicable only for chapter 17, I guess. Yeah, that's 17. Okay, based on that act, you don't have to pay any other tax for other than that 1% if you paid under the section 194S. Okay, that's the point 3.2. Let's say someone is airdropping you, let's say you got some other way of income that you earned or something like that. For those also, you will be that person who have to pay tax. Let's say someone has unknowingly deposited $10,000 or something like that happens into your account, then you will be the liable person who have to pay that 1% for the transaction. I think this people will pay easily, but yeah, even that will be what they are trying to do is like, let's say if you transfer money from DEX to your account, like to a centralized account, it is kind of like an airdrop if you didn't mention that DEX account is your account as well. So that is like an airdrop, right? So for the transaction also you have to pay 1% tax. So to reduce the use of decentralized exchange, they are charging tax over here. You get it, I guess. That's their proposed way, and for any transaction that will be applicable if some money is credited into your account. Okay, so they have given the enough, what to say, guidelines, such that if any doubts or concerns arise, that can be resolved by the board. Okay, that's what. If, let's say for example, if you are going to that income tax authorities and asking like what should I pay, what they are saying is like the board has given enough guidance such that they will come up with a solution for your case. And I guess the case will be like, okay, just pay the tax. I mean, for whatever you say, you can't really negotiate anything. Like, say, you did that, you did this, this is not taxable, nothing like that. You have to pay tax directly. That's all I think they will say. Let's see how it is going to be. So, it is also proposed to provide that in the case of any transaction where tax is deductible under section 140O along with the proposed section 194, then the tax shall be deducted under the section. So this is another section which is also with regards to the transaction. Okay, 194O. So what they are saying is like if certain conditions like transaction O and transaction S is in common, you can't say like, okay, I'm not going to pay via 194S, rather I will pay as in the section 194O. You can't do that. The precedence will be given to 194S, that is that 1% of the transaction you have to pay after all. And I didn't say what is 194O in here because it doesn't make sense, guys, because literally they are saying whatever the hell you do, you have to pay 1% as in tax, and there is no change on that. And so what is the point on saying like 194.0 is this or 194.0 is this, right? So just for that reason I avoided that. And let's come to this part where they mention who's that specified person. Okay, being an individual or Hindu, undivided family, whose total sales, gross receipts or turnover from the business carried out on by him or profession exercised by him does not exceed 1 crore rupees in case of business or 50 lakhs rupees in case of profession during the financial year immediately preceding the financial year in which such virtual digital asset is transferred. So literally they are saying like if you are a business person and your turnover is less than 1 crore rupees, you will be eligible as a specified person. Next point is that if you are a profession, that is you are a salaried person, if your income is less than 50 lakh rupees, you will be eligible. Okay, being an individual or Hindu undivided family having an income under any head other than the head profits and gains of business or profession. So if you are neither in business nor in profession, then also you will be eligible. That's the point they are trying to say in Roman number 2. Okay, so that's about 3.6 point. Okay, and this rule with regards to the transaction tax will be effective from this current this following financial year itself, that is 1st of July 2022. From then you have to pay 1% tax for this financial year. However, the 30% tax will be applicable only after the next financial year. So these are 2 days that they have given. So for transaction it will be from 1st of July 2022, and for the actual income part that will be 1st of April 2023. Okay, that's the point that they are trying to say. And I don't know how they're gonna tax the what slab. If let's say for the next financial year if someone is earning a crore, I don't know how they're gonna pay that actual income tax thing. Okay, forget about transaction, but I'm saying about the tax like the overall income. Okay, that's the point 3.7. So again the point number 4 is saying with regards to the airdrop or gift, that let's say if you are a user of Binance, you'll be knowing that you can send gifts around, right? By using gift card and stuff like that, you can send gift around. So if it's your family or any friends that persons who are sending gifts, then if the amount exceeds 50,000 rupees, it is a taxable event. Okay, that's one thing. That's point number 4, and that will be effective from the next year as well, like that 1st of April 2023. So every single thing has a different date. I mean, till now we have seen 2 different dates for this to be effective from, so keep track of that as well. Okay, so next they are saying, what is virtual digital asset? Long story short, what they are trying to say is like NFTs, cryptocurrencies, or anything that has to do with blockchain will be considered as a virtual digital asset. Okay, I'm glad that they have used the word asset after all these taxes. So yep, that's about that. And central bank may notify any other virtual asset as virtual digital asset by the way of notification in the official gazette. The non-fungible token means such digital assets are as notified by the central government. So yeah, what they're saying is like we can change or add on the list of stuff which is based on blockchain into virtual digital asset by notification in official gazette. Okay, so that's their point. Okay, and this amendment, that they can change the rules or that they can update the list, will start from 1st of April 2022. I don't think it's like a precautionary measure, I would say, but nothing will be included from here. Let's say if something new comes like an NFT thing, then they can easily add this by saying a notification in official gazette. That's their point. So that's about that, and that will be effective from like in, I don't know, in 21 days. Okay, that's the point. And clause, I don't know why they have mentioned that, but they have included this as well, guys. So that's for this video, and I hope you will till trade from till next year, considering that we will be in bear market. Let's see even you will be into cryptocurrency. That's the bet of government, or that's what they are trying to do. Let's see what you guys are, how it's gonna be. And one more point I would add is like even Dubai proposed that they want to be that global leaders when it's come to cryptocurrencies, and America is also trying to do the same. And if they are doing like a positive move and we are in negative side of it, I don't know, we will again be some workers who will be working for foreign companies, because we know technology better, or we are able to do technology for a lesser price already, and that's why we don't see any new or globally changing products that is made in India. Rather, we will be the persons who are working for the company which is in foreign, that makes a tremendous impact into our ecosystem. Okay, you can say like Zomato is there, Paytm is there, stuff like that, and you should be knowing that it is not owned by Indian people. Rather, many foreign countries including China has invested in these companies, but this product is running only, or this project is founded in India, that's all. But the money outflow will be towards China if at all they made profit. So if government do to keep this as a rule for the next year, I think the trading business will be low, so because of which the actual volume in the Indian exchanges will be low. Okay, so only that those are people willing to take that 1% transaction fee and willing to leave the market will do that. So general trading volume will be disrupted. I don't know, it's like a chain of consequence that will happen because of this, and there will be severe impact in Indian crypto usage. Literally, I guess only very wealthy people, or like people who can afford this will do, in my opinion. It won't be a gateway for development in any how. And government is saying like they are doing this just for the development sake, and they are literally killing it. I don't know how to say or how to mention such stuff. Let's see guys, let's see how it goes. And thanks for watching this video and me blabbering about it. Thank you guys, see you next video.